Robin, and the rest of the MitaTech organizers for making me take a 10-hour flight and have a great barbecue last night coming from Argentina. It was actually pretty good, so good job there. I want to talk a little bit about some figures of private equity and venture capital industry in Latin America. But first, I want to give you a little sense of what LAVCA is. It's going to be really fast. So if this works, there it goes. So LAVCA is a US-based organization which has been around since 2007, promoting the industry and trying to collect information and making sure that a lot of fund managers from all around the world look at the region and invest in private equity and venture capital. So we currently have about 120 firms that are member firms of LAVCA, and we do several events throughout the year. The last one was a couple of months ago in New York. Some of you were there. And collectively, those 120 firms manage about $50 billion. So it's a pretty big, big number for the region. We also produce some reports. If you go to our website, there are some of them available there, or you can see some summaries. But I recommend, if you're interested in knowing more about data of the region, LAVCA is a really great source to access that. These are some of the funds that are member firms that are focused in venture capital. So we also have the bigger private equity funds within the 50 billion that I just mentioned, but some of the names there are actively investing in venture capital in Latin America. In 2011, we had our annual survey on fund managers and investors in Latin America, so I wanted to share a couple of figures. This is the total private equity venture capital investment amount in 2011. For 2012, we don't have the final figures yet, but they're going to be close to this. And of those, there were 45 that were tech investments. So we can't really split between venture capital and private equity. It's really hard to do that in the region. But this is kind of a proxy of what we feel is the venture capital industry. And collectively, those 45 deals invested 107 million, which means that the average deal size is less than 3 million. So I wanted to walk you through some of the trends and stories we see in the region. First of all, as I heard yesterday, and I missed several of the panels, but I was here in the afternoon, there's a really excitement about the rise of the middle class. These are figures from Brazil. In Mexico, we've started to see many of these figures as well. Sorry, I didn't find any particular Mexican data, but I think this represents the region as a whole. Over the last 5 to 10 years, there was a huge amount of money coming into the region. There were many regulatory changes, and the region is seeing middle class growth significant, incredible numbers. And in fact, if you look at these figures, only in Brazil there are like 50 million people that moved up from low class to middle class. And the other interesting thing is that those middle classes are really connected, and the digital divide that used to happen between the upper classes and the middle classes is really gone. Yesterday in the women's panel, there were some numbers that weren't really positive, but I think that this is actually really positive. Of the middle class, there's 86% of women that participate from the middle class in social networks. So if you think about starting up a business and you're looking at digital businesses, this information is really, really valuable. In terms of a region, the other interesting thing is that it used to be that we had a huge gap in technology or access to technology between the emerging markets in Latin America and countries like the US or Europe. This is gone. It's more than gone, in fact. Some people argue that in Latin America we had a leap forward because we basically skipped the PC era, and now everyone has a cell phone, and most people have cell phone in Latin America, even in larger numbers or larger percentages than in other more developed countries. Educational levels, this is also something that was mentioned yesterday. In general, some of the most attractive countries in Latin America have relatively good educational systems. Yesterday I missed that panel, but I know that Alan Taylor mentioned that in some countries like Argentina, this is a pretty good differentiator, and it's a really good source of talent. And also the favorable demographics. I mean, globally, half of the population today is less than 25 years old. And in Latin America, this is even the percentage is even bigger. And again, these are trends that for someone that is thinking of starting a business in the digital space are really, really positive. And for investors, of course, it's also a very good trend. And the last is, in the next 4 years, we're going to see many dollars coming into the region because of these global events that are happening both in Brazil, but it's going to have an impact throughout the region, and it will give us visibility for many international investors. So those are the good news. Some of the bad news, though, that were also mentioned yesterday, to me, the biggest one is the lack of exits. As an industry and as a region, we need to focus over the next 5 years to start getting exits done and to start to get those role models that someone mentioned in other panels. We really need to kind of like work together as an industry to push for those exits to happen. And this is critical because not only this will give the returns to the investors, but it also closes the cycle, and it will create entrepreneurs that have money that can take that money and allocate a portion to that to angel investments, and this creates more companies, and it's the way that the industry will be sustainable in the long run. The second aspect, which is less obvious, is when you look at the US, there are many standard templates for doing term sheets, for doing shareholders agreements. Everyone has their own book. If you talk to different lawyers, they will have different types of term sheets. But overall, there's one major standard, and there's one rule of law, and you can basically talk the same language. When you go to Latin America, you have 20 countries, and each country is different, and not only is different, but most of them are based on law that is completely different from the US law. So when someone says, well, let's use the templates that they use in Silicon Valley, sometimes it doesn't work, especially when we're dealing with stock options, for example. Some countries are not able to create those kind of instruments. So you start getting into situations where, as an investor, you look at the Series A investment, and when you start looking at the documents and how it was created for angel investment purposes, it's really messy. And every country is different, so for an international investor to come into Latin America, sometimes it's challenging, and they don't really understand the subtleties. And this sometimes prevents investments. The third, this is something I discussed yesterday night with some entrepreneurs. In general, this of course varies country by country, but in general, when you're looking at the accelerators that are coming up, or even the angel investor networks, etc., typically, if you have a decent idea, getting the first 25 to 50K is possible. It's also possible that if you proved that you have a business and it's tractioning and you need funding to expand and to scale it up, it's also possible to find venture capital firms, both local, regional, and even from Silicon Valley, that are willing to pay to invest more than $1 million in a company that is looking really, really promising. What is really hard is the gap. Yesterday, someone asked about, I think one of the questions was, where do you see the gap? We see the gap in that range of 100 to 500K. Again, someone yesterday mentioned that here in Mexico, probably the figures are a little higher, that it's 250 to 750, probably because of the size of the economy. But in general, I see that there's a big gap there that is not covered by the accelerators, it's not covered by the angel investors, and it's not covered by many of the venture capital firms, which don't feel very comfortable investing in that price range. And lastly, the rule of law. In general, Latins tend to think about law as things that are there to prevent you from doing things, but we have our way, right? And this, for a long-term investor as a venture capitalist, sometimes is a big challenge. So where are the opportunities? When you think about industries, I think that we all agree that the main industries that serve the middle class are the ones that are more appealing. So you're thinking of healthcare, you're thinking about financial services, you're thinking about retail, you're thinking about even distribution, logistics, those kind of things, which are normally where the opportunities are everywhere, right? But what I wanted to give you today is some insight about where I think some of the opportunities are and how to approach them. Many things are taken for granted in the US and in Europe. that in Latin America don't exist or are really, really lacking. And I think that that's exactly where the opportunity is. For example, when you ship a product in FedEx, you assume and you know that it will get there. That's not true in many countries in Latin America. And when you apply this idea to industries like financial services, like distribution, like retail, that's in the combination of the industry and this type of opportunities is where I think the most interesting companies will come up. Another one is choice. You go to a supermarket in the US, there are 30 different ways of buying milk. When you go to Latin America, that's not true. Many, many industries have monopolies or pseudo-monopolies, and when you ask, what are my options for almost anything, there are 2, 3, 4. I think there's opportunity to build around that and create more choices for the consumer. And last is the customer experience. I've been going crazy thinking about how many things that I do every day I hate. And this is something that happens everywhere. And I don't know how many of you are happy with your experience going to the bank or dealing with your healthcare insurance company. There are many, many, many companies or many industries that are ripe for total disruption. But in Latin America, it's even worse because the Latin Americans are used to being treated badly. So even if you come up with an idea that is slightly better, if you focus only on the experience, the user experience, and make my experience of buying something better than, when I go to a supermarket in Argentina, I have to budget about an hour just to stay in line. And I don't go to a supermarket, I just don't go. So these are the areas where I think many of the next big companies in Latin America are going to come. Well, I think that was it, but yeah. There is. So I'm happy to answer any questions, and now or later. But thanks again for the invitation, and hope to talk to many of you later.